I'm Chimwemwe Mangazi with Business Time on Times. It is a magazine program where we bring you business and economic news stories making headlines. In the program today, stock market analysts divided in opinion on performance of the local bourse in the first half of 2024. Also in the program, the Cotton Council of Malawi moves to resuscitate cotton industry beginning next growing season. We have these and other stories. Stay tuned. Hello and welcome. Stock market analysts are divided in opinion on performance of the local bourse in the first half of 2024. While some believe the market's performance was outstanding owing to an 8% increase in the Malawi All-Share Index during the period, others believe it is still on the lower side compared to same period last year. I caught up with General Secretary of the Financial Market Dealers Association, James Binga. He explains.
Well, if we compare to the performance of the first half of 2023, the performance of the Malawi Stock Exchange in the first half of 2024 was lower. In fact, the return was about 9%, that is year to date, from January to June 2024, compared to around 65% in a similar period in 2023. However, I should mention that the performance had been improving, because in the first quarter, the performance was quite low. It was around 3%, 2.96%. But in the second quarter of the year, we saw an improvement as companies released their full year results for 2023. Activity started to improve on the Malawi Stock Exchange, and therefore the performance as for the 6 months was around 9%. Well, the outlook looks positive. We have had a number of companies release positive trading statements that their performance for the first half of 2024 is going to be much better than the first half of 2023, and that only means one thing. It means that the market is on those counters, the performance is going to be better in the second half of the year. So we are expecting to see an improvement in the performance of the Malawi Stock Exchange in the second half of the year. Well, as an investor, I normally say that each time is a good time to go and invest in the market, because we know what happens is there are times when you say that I'll wait for such a time, and by that time you're going into the market, you find that maybe prices have gone up significantly. But what I always encourage investors is to stay close to investment advisors, can talk to brokers that will help you determine the best times to enter and exit the market. But like I said, it's never really too late for someone to come in the market, because the Malawi Stock Exchange is one of the best performing markets in Africa, and it has been like that for quite a while. Sometimes the market will go down, sometimes the market will go up, but as an investor in the stock market, you have to be prepared to stay long term, and that's when you benefit. If you look at the performance of the market in the first half of the year, you'll see that of the top 5 performing companies, 4 of them are in the financial market, which shows that despite the volatile environment, the financial services are still performing well. And therefore, those are some of the companies that one might consider. But I should stress that it's always encouraged to diversify your portfolio, and you can only benefit a lot from the stock market if you diversify your portfolio across industries, and even across within the industries, across several companies.
And Kwani Makwakwa is Stockbrokers Malawi Limited Equity Research Analyst.
I would say that the Malawi Stock Exchange has really performed well. If we go by return, the Malawi Share Index, which measures the return on the market as a whole, which has gone up to around 8% January to June. We can attribute this to increase in share price, especially those in the banking sector and tourism. We have seen a share price of FDH moving substantially. It's now at around 85. And we have also seen Sunbed Hotel moving up. So, well, I would say that yes, some sectors haven't performed well, but some sectors have performed very well, which also brings the issue of diversification to investors, to say that whenever you want to invest on the stock market, number one strategy should be to diversify, to hold a diversified portfolio, whether you have got a telecommunication company, and then you can have the banking sector and the tourism. Because you see that other companies or other sectors, rather, they are still recovering from the effects of the devaluation that happened late last year. Yeah, so we would say that. Well, the outlook still remains very positive. We have seen companies releasing what we call trading statements, whereby they are telling shareholders, they are telling investors, potential investors, to see, look, our performance for half year are going to be differ from the previous performance by so much. So we have seen those trading statements, most of them are being positive, which will translate to profitability, and at the same time might translate to good dividend. So with the dividends, good dividend being declared and the performance being good, it's most likely that the upward movement will continue for at least the remaining months. Well, at the moment, I think the banking sector is one of the sectors which someone can think of. Why? We have seen interest rates are going up, and we have seen the government appetite on borrowing. So the banks are able to make money despite that the interest rates are going up, which gives an opportunity to someone who wants to invest on the stock market, in particular on the banking sector. So yes, and another thing is when we say that the banking sector has performed, we should also consider that the banking sector makes a good portion, a higher portion of the Malawi Stock Exchange. So hence, that is why we have had that situation. So yes, one thing to look at is the banking sector. But even other sectors, I would say that like the telecommunication, which we believe they are recovering from the effects of devaluation, can be a good buy, provided that someone is buying for long-term future. Remember, we always say that the stock market is not for short-term, it's for long-term. So yeah.
The Cotton Council of Malawi, CCM, says it has laid out a plan of action to resuscitate the cotton industry beginning next season. Among other things, the council has stepped up efforts to multiply seed and plans to import some from neighboring countries, amounting to 500 metric tons to be distributed to farmers, and establish structured markets for marketing of the crop. CCM Executive Director Cosmas Luanda explains more in this interview, and he begins by analyzing the 2024 cotton season.
The cotton season, as it concludes, has not been very favorable this year, because we faced quite a number of challenges to prepare for our production. Right at the beginning, I think we needed to mobilize over 2,600,000 United States dollars that should have been used by the Guineas to import cotton seed from outside this country, because as you are aware, we are importing hybrid cotton seed from India. And we tried as hard to look for the forex, but it was nowhere to be seen. So we faced difficulties, to access seed from outside. But having faced that difficulty, we looked around within our own country, to mobilize the seed that was remaining and plant. And farmers really planted, and what we are supposed to get in this current season, according to the estimates that we have produced, is around 10,000 metric tons. Not very different from last year, but our plans were that we should be able to produce 40,000 metric tons, but we are limited by the amount of forex that we accessed in order to get seed into this country. Now, because of that challenge, what we did was to look at the capacity that we have to produce seed within the country, especially the open pollinated varieties. So we mobilized open pollinated varieties from, that is basic seed or breeder seed from Makoka Research Station, which we multiplied within the country. And this year we have managed to produce over 600 metric tons of seed, open pollinated varieties. These are Makoka 2000 and Razam 17, which are local varieties that we should be able now to be using the coming season. And apart from that, we have also looked into the region to look at open pollinated varieties that we can mobilize from the region, like Zimbabwe and Zambia, that are also already released in Malawi. Those varieties we are also going to mobilize to use within the coming season of 2024. The plan that we have developed with stakeholders this coming season is that we should be able to mobilize seed in the regions of 500 metric tons that we are going to distribute to farmers on zero deposit. We are saying zero deposit because we want as many farmers as possible to access the seed, because that has been our major challenge. We will mobilize farmers across the country through our campaigns and through meetings with the farmers to engage them and talk about cotton production, so that we're able, through the 500 metric tons, to produce not less than 50,000 metric tons of cotton. We have beaten, or we want to beat, the challenge of seed by using the open pollinated varieties as well as the hybrid varieties that we're importing from India to supplement what we have done on the local production. So we hope that the coming season is going to be a very different season. Apart from that, we are also working on structuring the market so that we de-risk it. We remove the risks that are making investors afraid to invest adequately in the sector. We are doing that by trying now to bring in aggregation of cotton, so that anybody who has got an agreement with somebody within the stakeholder groups in the cotton sector are able to be accountable to each other. There should be traceability of transactions. Each one who owes the other should be able to pay back through that system. So just a few days ago, we were talking with ADMAC. We are going into an MOU with ADMAC so that ADMAC provides the facilities for the aggregation centers. Yes? And when they do that, cotton is going to be aggregated at one center, something mimicking what happens with AHL, the auction holdings of tobacco. We would like to reach that level, where now we are de-risking the sector and inviting more investments into the sector. Currently, we are also talking to banks to come in and support the sector, so that as we go along, we should be able to get more support for production, so that more farmers are coming into the sector to produce more cotton that this country badly needs to produce the forex that we need, to produce the employment, to create the employment that we need, and again to produce more cotton that can suffice for us to start value addition within the country to substitute the imports that we normally are getting from outside. That end is going to be sorted out, yeah, because we have been talking to other players. They are just standing on the margins, to watch what is going to happen. If we de-risk the sector, there are more investors that are going to come, because investors have pulled out because of the risks that are there. Most of the investors have lost money in this period. Even government, for some time, I think in 2011 it invested money, in 2019 it invested money, but because the structure of the marketing was not tight enough to secure investments, people were running away to invest in the sector. Now we are trying to structure the market properly, so that the risks that people have been afraid of are removed, and then they are going to come back and support the sector adequately. We are not completely moving away. What we are saying is we don't have to just depend on one aspect, because it brings risks to the sector. If we fail to access adequate forex, it means we are dead. Yeah? So we are saying no, we shouldn't die because of a risk that we have foreseen. That's why we are supplementing imported production with local production, so that in any case, whether forex is there or not, we should be able to be in the cotton business. That's what we are doing. I'm saying we produced 10,000 this season. Of course, it's yet to conclude, but that's the projection that we're getting. Yeah, but our target was 40,000. So you can see the percentage is just about 25% of the target that we planned, and that's not good enough.
Is cotton a dying industry?
Cotton is not a dying industry. It's not. We just need to do certain things right. And for your own probably emphasis, you know, to try to bring the light back, you know. Certain things that we are doing now, we are just trying to retrace the steps that we missed before. Because cotton has demonstrated in this country before that it's a vibrant industry, it can create employment, it can bring about the forex that is a challenge now, and it can, you know, substitute imports that we're getting from outside. You know, the value of imports that this country is getting from outside in cotton and cotton products is in the regions of 317 million Malawi kwacha. And I'm getting these figures from the, you know, value addition strategy of the Ministry of Trade that they developed in 2017. And if you calculate that value in the real term, in the real value of today, of the dollar to the kwacha, it is more than that, because those values were calculated in 2017. They must have, you know, multiplied by say 2 or so. So the industry of cotton is a vibrant industry.
Representatives of Ilovo Malawi have indicated that the company continues to suffer the lagged effects of the recent 44% valuation of the kwacha and rising inflation witnessed by a reduced profitability outlook. This came out during the company's investor engagement meeting in Blantyre recently in respect to its performance in the 6 months period ending February 2024. We have more in this report.
It has transpired that the company's operating profit has gone down by 20 billion kwacha and net profit by 11 billion kwacha. Ilovo Suga Malawi Finance Director Kondwani Msimuko says the main contributions to such developments has been the devaluation, which culminated in exchange losses of about 18 billion kwacha.
The sole purpose of this is just to engage the shareholders in terms of how the company is doing, what the company is going through, and what are the mitigating factors to those particular challenges that we're facing in our operations, in our commercial side and all that. It also brings together an understanding of where we are and the journey that Ilovo Sugar Malawi is taking to the future, and how it will interact with its key stakeholders like government, customers, and its shareholders. The operating profit has been down by 20 billion and then a net profit by 11 billion. The main contributors to that is actually the devaluation, I think, contributed quite a lot. So we had exchange losses of about 18 billion coming through that. The other issue is also the high inflation we're currently facing. So that has got put pressure into our expenses, therefore impacting the overall profitability. The other bit that I would actually also say is that you noted that we had a stock out in the country, or a shortage of stocks. So we had limited stocks because of the production. That was as a result of the cyclones through the yield recovery, I think, since the post cyclone event that actually happened. So that have affected us in the long term, but mitigating factors are on the way to actually recover those yields. Yeah, so I think the first thing we have to fix are the yields. So we need to fill the mill capacity. I think the low yields in both of the estates are affecting us to actually operate at our capacity. If we feel that, I think we are able to supply both the domestic market and then the export market. So I think that's something that we are working on at the moment. The second bit is actually just debottlenecking the plant. So all the necks that cause in the operation side from an inefficiency perspective are being worked on from a factory perspective to make sure that we can increase our capacity. So that you'd see that in our pipeline of 5 years is what we're working on, to make sure that we can suffice the domestic market. Over and above that, our export markets. The other bit is also just working with the government in terms of the cross-border trade that is being done, is happening at the moment, to make sure that our consumption is equal to the sales that we make. So those are some of the initiatives that we are working closely with government, and from an internal perspective that are controllable, we're actually doing. Thanks very much. Yeah, so I think post the two cyclones, that's Anna and Gombe, we had damage to the cane that was done immediately. But as we're all aware, Nchalo is actually a salty place in terms of water. Any borehole you do down there would actually have saline water coming through. So what happened was that as the water was coming through, there were some salt deposits. That's the first thing that we actually experienced. Over and above that, there also siltation, so the sand being brought into good soil. That affected our tune germination, the rate at which it's being done. So what we're actually doing is that how do we bring that soil health back to normal to make sure that we can plant. So there's crop rotation that is being done at a higher scale than we initially planned. So that would actually bring back the soil health. Over and above that, there's green cover. So crops that we grow, those are plowed back into the land to make sure that the land can be resuscitated. So from a soil health perspective, I think it's the salty water that was brought by the floods. Over and above that, the siltation, the sand that came into the fields.
One of the company's shareholders, Joe Mairi, says the performance of the company was understandable considering the economic situation.
The performance of Ilovo in the first half has not been quite all right because of the situations that have affected it, especially the devaluation of the Malawi kwacha in November, and also the inflation that followed thereon. So generally, the position of the company, minus these things, is quite all right, but it has been dampened by the two things, inflation and the depreciation of the Malawi kwacha, which is an external factor that Ilovo could not have done anything about. But going forward, we are sure the company will still maintain its resilient performance for the betterment of the shareholders and other stakeholders on the Malawi Stock Exchange. In fact, they have already suspended a dividend that was an interim dividend that was supposed to be paid. But going forward, if they also seeing the necessity on the basis of the performance of the economy, it is good for them to retain the money so that they can invest it in the business, so that they don't need to borrow, other than give the dividends and go again to borrow. So it's better they retain the dividend, because we know it's a performing company and it's a performing counter. It's only the circumstances surrounding the external economic performance of the economy. Yes, we are very okay, because highly likely that if they give that dividend and because the performance of the kwacha against the other foreign currencies is not quite all right, we are very uncertain about the performance of the kwacha. Now, if they give us and they end up borrowing again, they're going to borrow at a very high rate that will injure us in the future.
Ilovo Sugar Malawi is the country's largest producer and exporter of sugar.
With that item, we've come to the end of today's edition of Business Time. This is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I am Chimwemwe Mangazi. But always remember, if it doesn't make money, it doesn't make sense. Bye for now.